Sometimes I feel that I experience pretty much every possible mistake in crypto markets, and unfortunately, majority of the people go through the same thing, and instead of learning from others and what they done wrong, they repeat these mistakes over and over again. And this is the reason why I should be careful when it comes to this mistake that I did and when it comes to the capital preservation in general. So stay tuned. Hello everyone, I'm Željko and welcome to CryptoGrid. So I joined the blockchain space at the end of 2016, start of 2017, and that's pretty much when I started mining from my apartment. And firstly I heard for Ethereum, then I heard for Bitcoin later on, which is weird for the majority of people. And when I started looking at charts and these things, I realized that Ethereum will probably outperform BTC in the longer run. At the time, my portfolio was really small. That's honestly like the first asset class in which I started investing. I never invested in stock market. I never invested in gold, commodities, or anything like that. I got more and more jobs and I realized the potential of the blockchain space more and more. And I started understanding that the more I'm in, that the higher possible returns will be for me. So at one moment, I pretty much decreased all my expenses and everything, and I started investing more and more in crypto. And over the time, I thought that I should invest even more than I'm investing, and I was looking for the ways how I can do that. These were also the times when you could see a huge increase in your portfolio in really short amount of time, and pretty much I started investing all the money that I was earning, and with all that money I was buying more and more Ethereum. And pretty much that's the moment when I found borrowing and lending crypto. And what I was doing is I started borrowing USDT on the Ether that I had. At the time I started realizing that Ether might outperform BTC, and at that point I was right. But one thing that I wasn't realized is that we are approaching to the top of that market cycle. And at that time, I didn't know what are market cycles, what is technical analysis. What can I expect? I just expected more and more parabolic move up. At one point, I saw a huge increase in portfolio in short amount of time. That's the first moment when I got to six figures. I did some calculations and estimations and I realized that I'm depositing more and more money each month. And that, for example, if you have 100k in it, that you can borrow that and take 70k in USDT. And since I wanted to be even more leveraged, I wanted to have more crypto when the prices continue rallying up, I was pretty much digging myself deeper and deeper hole. So if you look into the charts, this is the time when I started borrowing. And pretty much I realized, okay, the prices are going parabolically up. This will never end. The Ethereum price will just skyrocket. And as the prices were increasing, instead of selling my own Ethereum, paying back the loan and cashing out the profits that I did, I was pretty much taking bigger and bigger loans. So for example, on 100k of Ethereum, I would borrow 70k of USDT and I would buy Ethereum with that. Then I would take that 70k in Ethereum and I would pretty much borrow more USDT. And at one moment I saw this huge decrease in price, then we saw price coming up again. And as we started retracing, there is one moment when I pretty much realized that I will either accept the lose or I will get liquidated. So pretty much at that time I was thinking and thinking and thinking, and I really wasn't sure what's the right decision. Honestly, always the right decision. On the first time you come into this situation, you should immediately close all your positions, accept the lose, and try to move on, which was difficult for me to do at that moment. But eventually I had to do it, and that's pretty much how I lost 30k just on this. Some people lose it on trading, some people lose it on this way, some do it by buying massively small caps. There are numerous ways how you can leverage yourself, but in my opinion, now after that, at that time, the rates for which you could borrow were pretty appealing. You were paying like 2, 3, 4% yearly, and in comparison to the Bitcoin or Ethereum growth that you could expect year to year, fees look really, really small. And these were the times when I had no clue about technical analysis, about market cycles, nor anything pretty much. And I was new to the financial space, and I feel that these are one of the mistakes that a lot of people go through, especially for the people that use cross margin trading. They expect that they have big enough portfolio size to never get liquidated. Then you get one sharp wick to one side and you get liquidated easily, and that's in high interest to centralized exchanges to happen as well. One of the things that I wasn't realizing back then and that I realize now is just being at crypto is already high enough leverage in terms that the crypto volatility, even though it's decreasing consistently, is still pretty high. And when I'm saying that it's high leverage, that means that you have really high upside, pretty much higher upside in comparison to all other asset classes, but also the potential downside, especially if you're investing into smaller cap coins, is pretty high as well. At that time, crypto borrowing and lending was new to the space as well. Now these rates are much worse, and also probably the people that are actually doing it, they're doing it with slightly smarter approach. But in general, I would try to dodge any type of leverage, even if your portfolio is small. Just give it time, work and learn consistently, and that's how you will grow your portfolio. From what I see, majority of the people that are even trading with high leverage, yeah, it's good tool if you want to trade with 10x higher position with not holding that amount of money on centralized exchange. But in general, you don't want to stay over leveraged for a longer period of time, because usually the best opportunities in markets even come when a lot of people get over leveraged, and when they get liquidated, that's usually when there is like most blood on the streets, and that's like the moment when you should go in with a higher percentage of your portfolio in comparison to the majority of other situations. And just by not being leveraged, not being in debt, not being in these bad situations, you can have much clearer thinking, you have like cash at the right moments. And this is really important. If you stay clear of debt, clear of leverage, you will be much sharper and you will make smarter decisions when the right moment for that comes, and you will have way more patience, and you will never feel pressure to make certain amount of money to pay off the debt that you're holding. So don't go through the same mistakes that I did. Don't do some stupid stuff. Don't put yourself in a situations that you don't actually have to. Just by looking at the long-term growth and just by giving yourself enough time will create good behaviors, and you will just grow your portfolio by default. This will create consistency and good behavior in the longer run, which will be really helpful on your investing journey. So thank you for watching this video. I hope it was helpful to you. Please consider subscribing, and if you have any questions, write them in the comment below. Stay strong and healthy. Bye.